Hey guys, what's going on? Hope you had a good week trading. I'm going to do a quick review of Jeff Bullseye's trade of the week. That's the trade where he releases the alert on the Monday morning. So he'll just release a single options trade. Usually it's a call, sometimes it's a put, depends on the market. Typically it's usually calls. In this case it was AFRM calls, so you can see that right here inside the dashboard on Bullseye Trades. Bullseye Trades, really low cost swing trading service. It's $97 if you use the link in the description below that I'll put there, and I'll also put the track record and review that I have as well down in the description below, so you can go and see what this service is all about. And it's been interesting. So last year it was really good service. This year it's been really good as well, but a lot of people kind of gave up because a lot of these calls and these picks at least are getting away from them before they're able to get an entry. So that's definitely a problem, but it doesn't mean that the service isn't any good. It's something we just have to kind of adapt to, and I'll show you what I'm trying to do to adapt to getting into these, even if the stock or the underlying starts to take off without us right at the open on Monday morning. So let's get started. I'm going to talk about this. I'm going to talk a little bit about the new algo I've been using. It's called Easy Algo. I'll leave a link in the description for you to check that out, because I think it'll help a bit with these Bullseye trades, along with Algo Pro and some of the other ones that I've been talking about over the last few weeks as well. So this is the email that you get. It's a typical email. There's usually like an ad for one of their other services at the top, and this one was the Bullseye pick of the week. It was on November 27th. It's currently Saturday, the 2nd of December, so it's been basically 6 days since this pick came out, and this is the usual sort of format. He talks about the week before. So last week the AI was a wild one. Initially the option shot up 100% on Monday, then collapsed on Tuesday. And so people that got in on that one were excited because it really made them a lot of profit quickly. But unfortunately, like I said, people have turned away from this service because they're kind of spooked about things either not working or working just too well. Because Jeff is by momentum. And the problem is the momentum can be a little bit too fierce sometimes, right? And you can't get in. So I've had a few people saying, oh, it's the worst service ever, but if you actually look at the data, it's one of the best services ever. It's just timing that entry and having the guts to get in fast enough this year. So last year it was good to wait and wait for a dip, and that's kind of what Jeff found. That was what he did. That's how the service is formatted. But this year it's all been about right out the gates, the thing just rockets, and if you've got the guts to get in, you make a lot of money, and if you don't, then you go away and you say it's the worst service you've been part of, blah blah blah, even though it's only $97 for a year. So let's look and see what he's talking about here. So this last week's Bullseye Trades was AFRM, which is part of this buy now pay later stuff. So the idea that you can buy stuff and companies finance it for you, and you pay it over several months at a high interest rate. And part of his sentiment here was, or part of his thought process was because of Black Friday. It was a record Black Friday with 9.8 million sales in the US. So the idea is this would probably give this sector a boost, and it did. So he said, I think the surge in sales could provide a temporary boost for the stock over the next week, and it certainly did. Now the problem is that the stock is already trading 50% higher than it was a month ago, and don't forget, I hate the stock, it is junk. Just because the stock is junk doesn't mean that it can't make a good move for a short period of time though. You'll see his thesis here it's spot on. It's just that people get mad because they can't get in on it in time, and you'll see. So AFRM also has a very high short interest, something in the neighborhood of 20% of all the shares outstanding are short. This can provide a temporary boost with a squeeze. So this comes when they become buyers, when they have to close out their positions. And as much as I don't like the stock, I think it has a good chance of making a 10% move this week. And then he highlights buy AFRM calls. This was Monday morning at the open. And so talks about Alpha Hunter a little bit. I'll leave a link for Alpha Hunter because Alpha Hunter is on fire. This guy's making $10,000 to $20,000 a month selling options, which is really cool. Using position sizes anywhere from $3,000 to $5,000, sometimes a little bit more, depending, sometimes less. It's been really good. So that's definitely worth something checking out as well. Let's see. So kind of go down here. So I didn't go to the live session, missed it, but he said basically he plans to buy AFRM calls in the opening hour. Unfortunately, what happened is, so Jeff has always been, with Bullseye, has always been kind of like a bargain hunter, and I've always done exactly the same. So we've both had problems this year in terms of getting into these things. So he's saying that he wanted to buy calls around 40 cents. Now, normally what I do, and I did all in 2022, is I'd wait for this to actually like go down on Tuesday or Wednesday and get them for 30 cents. But in this case, they opened at like $1. So I think that puts a lot of people off. And you can see it in the comments down below. So he says like, usually do you think picks up blah, blah, blah. Let's see. So would it be a good entry? So this guy says, I've mentioned it before, it's good just to buy your pick right at the market open. It seems to work out just fine the vast majority of the time. We call it on AFRM. The problem is last year that was the opposite. You would get burned if you bought right at the open. So it's like he's got like, I think because of the lack of momentum last year, because it was more of a bearish market, now it's more bullish market, these things are moving much faster and it's catching all of us, me included, by surprise because the things are moving so quickly out of the gate. And even Jeff was saying that, he said, I decided I'm going to start buying the stock itself near the open so at least I can get a piece of the move. I'm getting tired of these great calls, not making any money from them. And so this was a fantastic call, and I'll show you exactly what happened in a minute. One guy got some of it, that's good, so he got 100% move there, almost on it. But this is tiny in comparison to what actually happened as time went on. So let's have a look at the charts. So where my cursor is here, this is Friday, so this was Monday, and you can see from Friday on AFRM, this is a 2-hour chart, it gapped up pretty significantly to here, and then continued to run all the way to Friday. This is Friday on the right here, at the close. So this is the move, which is phenomenal, right? That's fantastic. What's even better is the contracts. This is a plot of the contracts for AFRM, so if you look at what Jeff said to buy here, I'll just go back up. He said December 8th, $30 calls near 40 cents. So if we go to the options here, this is the date right here, the 27th. You can see we're about $1 on the left here. And that's what put a lot of people off. So people are going, this is disingenuous, this is not true, like, this was not a good call. It's like, no, it was just better than expected. So I mean, it continued all the way up. Now what Jeff might have to do, I might suggest it to him, is to increase that buy price. So if you see it gapping up on the Monday morning, maybe don't put 40 cents as the buy price, because people see that and they go, oh, that's his price, that's his price. But not necessarily, that's just, you know, before it really starts to take off. So it might be worth thinking about just being able to buy at higher prices. And that's hard for me to stomach because I made money last year waiting for dips below these buy prices. But now, if you don't chase it, then you're kind of screwed. So got to start doing that. Anyway, the first target was 30 and then 33, and you can see we blew past that pretty quickly. 30 is right here. 33 is right here, and we ended up at 38, almost up here. So absolute annihilation of the price targets. And I know this happened last week or the week before to a couple of people who missed the actual price he stated by just a few cents, and then it exploded. So it's becoming a frustratingly common habit, but going from $1 to $8 per option contract is just amazing. So it's a fantastic trade, and I think he got it right. I mean, not that it was tradable particularly, you'd have had to chase, but if he just said, hey, look, you know, this could be a buy up to $1 instead of 40 cents, then things would have been completely different, and everybody would have been singing his praises and saying how amazing that, you know, Jeff is, and this was such an amazing trade, and 500% on your money sort of thing. So it's this price that's the problem. It's usually under, and it's because he likes to wait for bargains. He waits for dips, and that's fair enough, and it worked well last year, but not so much this year. So anyway, that's that. I wanted to point out though that if you use the new algo, and I'll leave a link to this in the description below, this algo is called Easy Algo. It's something like $34 a month. I'll leave a link to my review of it. And I'm testing it to see if it'll work well on Bullseye trades. Algo Pro works well on Bullseye trades, but this one actually seems to be a little bit better, like just a little bit more accurate for shorter term entries. Algo Pro is amazing. It's still my favorite indicator. The problem with Algo Pro is it tends to like have less signals that are more accurate. So, which is a good thing usually for me, but also for terms of Bullseye, I need there to be a signal around the time that Jeff is looking to enter. Otherwise, it's not too helpful. So what you're looking at here is the easy algo. There's three things here. There's a buy signal, which is this blue arrow right here. That's a buy signal, so that's the overlays that you get with all these algos. Then you're looking at two orange lines here, these two right here. That's a golden pocket, which is an interesting concept. It's to do with two Fibonacci levels. So if you go to here, I'll leave a link to this in the description. You can see how people play these Fibonacci retracement levels. This one's called the golden pocket in particular. And so it's often a really good area for support resistance. And so it often is useful to have that. And that's what this area is right here. So when you're bouncing off of basically an area called the golden pocket and getting a buy signal and you're starting to get momentum and Jeff Bishop is saying, you know, this thing could rip this week because of short squeezes, because of the sector that it's in, then it could be worth jumping in here. And in this case it definitely was, and it went all the way up here. Notably, these blue bands are the 4 hour, or actually I think they're the 2 hour main resistance and support lines. So you're also getting a break of one of these lines as well on, break up through here. So this would have been a nice indicator to say, hey, okay, maybe Jeff's right here. Like the technicals on this indicator is easy algo. Again, there'll be a link in the description for you to check out the review I've just finished on it. That combined with the fact that, Jeff's saying that, and the fact that we went all the way up and started to get a little bit of resistance up here on one of these other key zones. They're not levels, I'd say they're zones, because you can actually set them for different widths, which is kind of cool. And then we ended up breaking up through that one anyway, so yeah. So it's pretty cool. So yeah, so check out the $97 offer for Bullseye trades. I think it's worth it. I think just getting the idea and then looking at your own technicals and making your own decisions is definitely worth it. Because AFRM wasn't on my radar whatsoever, and it was an amazing trade. The only thing that really was off was the buy price was too low, meaning that very few, if any, people actually took the trade. Let me know if you took the trade in the comments below. I'm always curious to see who is doing these. I used to joke that people that chase these things would get burned. That was last year in 2022. This year it's been the people that have been chasing, that are not chasing, but not being afraid to jump in quickly. They've been making the money on these trades. And somebody was saying that it's been a disaster, blah, blah, blah. And I just said to them, like, look, go back through it and look carefully at every trade that's happened. And you'll find that most of them have actually been big winners. It's just difficult to get in and get in at the right time, but it's still one of my favorite services out there. I just have to try and learn to pull that trigger a little bit faster, like a lot of people that are doing this. So yeah, okay, well hopefully that's helpful, and I will talk to you guys soon.